is the first week of December, which means we need to discuss what are the best stocks to invest in right now and can also help to set you up for 2026, because now would be the time to start planning that. I'm going to start in no particular order. I'm going to give you some of the pros and cons and why I selected some of these stocks as well. And if you've been following this channel for any length of time, you know that we're pretty good. Pretty good at what we do here in terms of disseminating information and choosing individual stocks. So go ahead and hit that subscribe button. Let's first start off with Wynn Resorts. WYNN is the stock symbol here. It's up 46% in the last 6 months and up just 40% over last year. I say just 40% as if that's not a great number. For context, the stock market averages about 7% after inflation. So a 40% return is quite good. Now, the reason why this one is doing quite well, because it had some off years, is because they're expanding, or have expanded rather, into international gaming, particularly in Macau, and that is something that has stood out. Now, this stock is not perfect. I repeat, the stock is not perfect. So I would do a lot more digging into how the international market is doing and what are the risks there, because international rules in gaming and how their politics may play out is a very big factor into why this stock is doing well. And if that should change, that is something you absolutely want to pay attention to. Next here is a usual suspect. That is Broadcom. AVGO is the stock symbol here. Up 57% in the last 6 months. Up 135% in the last year. That one is obvious. We've probably talked about that one for 2 years at the bare minimum. Next here is a new entry on the list. That is Johnson & Johnson. Now, they have been, used to be, let's just be right, they used to be a bellwether blue chip stock, meaning they were a name brand company that almost everybody wanted to have in their portfolio. They went through several lawsuits around baby powder, a bunch of other things. They spun off the company and split off and did a whole bunch of other things to try and get the ship corrected, and perhaps they have started to do that. Now the company is up 32% in the last 6 months and up 31% over last year. This is a good, solid stock that you might want to consider. What I try to tell people, especially in times like this, though the market is up, is that yes, we know tech is where the hot stocks are. We are going to talk about one that's up close to 200%. You also want to have some companies that are not necessarily correlated with tech. And Wynn Resorts is one of those, but also Johnson & Johnson. Plain, boring, and could continue to rise at the clip that it is. And that is something that is relatively insulated currently. Now, we'll see what's going to happen in the future, but keep that one on your watch list. Next here is a stock that comes up, I feel like every other year. Okay, every other year. It's Caterpillar. CAT. Its stock symbol here is up 67% in the last 6 months, up 44% over the last year. Now, why would Caterpillar be up? Because that was the main concern for me. I didn't understand why Caterpillar would be up. We are well past the hype of the infrastructure bill. That is the last time I was really excited about the company. But now, what are companies building? What is everybody really excited about? They're excited about AI, and they need to build power plants. They need to build more places to create energy facilities, I guess is the best way to put it. And they're buying Caterpillar equipment to do that. That is one reason. They also have a bunch of back orders, which signals to investors in the market that they are seeking Caterpillar equipment, and obviously the stock has responded to that. So that is another reason why Caterpillar is doing quite well, and is another one that is, again, not necessarily correlated or as correlated to the AI, what some consider to be an AI bubble. Now, we'll see if that's going to be the case. Now, my guess would be if you are buying Caterpillar equipment, you are building a new facility or an electric plant or a data center, which is primarily what they're doing here, I don't think you're just going to cut things off immediately. I think you are well entrenched in that and should at least do well for the next 6 months to a year, which is the time frame that we look for in these particular lists. Next are 3 stocks we had talked about before, all in the financial category. So we're going to sum all of these up together. And really, there's another financial one, but we'll keep that to the side. First of the 3 in this category is Citigroup. Stock symbol here is C. That is up 37% in the last 6 months, up 46% over last year. I've talked about Citigroup and the financial industry several times throughout the year. I'm not going to go through and repeat it. Now, we also have Bank of New York Mellon. That stock symbol is BK. We've also talked about that one several times, at least a handful of times, up 26% in the last 6 months and 37% over the last year. Quite solid. Again, you want to diversify. Have you some tech, have you some finance, perhaps have you some industrial stocks like Caterpillar, and get you some of everything. Okay, just like Thanksgiving. I know it's over, but go and get you a plate, go and get you some sides, some ham, some turkey, whatever you need. Y'all just want to have all of one thing on that plate. Now, next here is Invesco. Now, we did talk about Invesco last month, if I'm not mistaken. IVZ is the stock symbol here, and it's up 65% in the last 6 months and 35% over the last year. If I'm going to buy a finance stock, that is the one that I am looking most towards. So we will see. You guys know that I make changes to my portfolio near the end of the year. We are getting quite close to that, but that is the one that I am zooming in on to see when we replace the current replace the current finance stock with that one. So that's the one I have my eye on particularly. Now, we have a new entry here. Now, this stock, I've had my eye on, and it ain't hit up until now. And that is Ralph Lauren, RL. They're up 29% in the last 6 months, and up 60%. Up 60% in the last year. Now, the reason why they're doing that, or one of the reasons as to why the stock has increased the way that it has, is one, they have done better with their direct-to-consumer. If I'm not mistaken, I think it's 70% of the revenue comes from direct-to-consumer, meaning we sell it straight to you. We're not going to JCPenney. They definitely didn't sell stuff in Target, at least not to my knowledge, and selling it to a middleman or middle store, if you want to be more correct there, and losing out on profits that way. They've done quite well direct to consumer selling that way, and obviously the stock again has responded. They've also helped to improve their margins. Margins, for those that don't know, that is the cost of the things that you are making and the price that you are selling it for. So either they are getting cheaper goods, right, to make the things that they are selling, or they're just raising price. Either way, you are improving your margins, and the direct-to-consumer also helps to do that because I'm not, discounting my products by selling it through a third party or putting it in someone else's store. So that has helped with Ralph Lauren's performance. And for me, if you go further back, let's say 2 or 3 years, the stock has been okay, but it just hasn't shown this level of strength where it pops out compared to other stocks out there. So that is why I'm taking another very strong look at it here. I want to go back and see if they have insider buyers because that's going to be the trigger point for me. Then we've got the king, the one with the crown here, and we have done an entire video on this that you absolutely want to check out, and that is Robinhood, up 92% in the last 6 months, up 239% over the last year. I'm going to repeat that and say that just a bit slower. Robinhood is up 92%. The time I'm doing this video in the last 6 months alone is up 239% over last year. One of the main reasons as to why Robinhood has done so incredibly well is its, I was going to say futures contracts. It's event contracts. People are, for example, you can invest on whether you think or whether you thought this was last year, Kamala Harris versus Donald Trump was going to win. That is an investable contract, was an investable contract on Robinhood. They are doing that with a whole bunch of other events, and that has been a cash cow for Robinhood. If you want to know more about that, I've done an entire video on it here, and it has been quite interesting. That is the one that is on the top of my Christmas investing list for the end of the year. Now for me, again, for those that don't know, I always make just 2 adjustments every year. One is in December, see how my stocks did. We actually do a video about that, make those changes, and then I do it in June. So I start to collect these lists, right? And make a list, I check it twice, do my research, and decide what needs to stay in my portfolio, what needs to go out. So these are the ones that are closest to being added to that portfolio. All these are candidates, but I need to also check what am I currently investing in, are those things still doing good, and are they doing better than what we have right here. If you want to know more about investing in the stock market, then you want to check out these videos right here.